Thanks, Aya. Well, hello and welcome. It's the first full trading week of 2025 right here in Lagos, Nigeria. Let's get to the top stories that set to agenda now. We see the price of oil increased slightly today, reaching its highest level since October. And this happened because investors are worried about how colder weather in the northern hemisphere will affect the demand for fuel. Brent crude futures, we've seen that up 0.2%, $76.66 a barrel. We're seeing both benchmarks starting the year quite strong at $74 for WTI. Staying above that $70 psychological level, 0.3% up. Also, China is trying to also, we're going to be looking at what's playing out that's in China to see how that plays into the oil market. But we'll take a quick break now. When we come back, we'll get to other stories, especially Naira. Do stay with us. Welcome back. Well, almost 2 months since its resumption of operation, the Petroleum Products Retail Outlet Owners Association of Nigeria, that's Petron, say that the marketers and retailers of petroleum products will start lifting premium motor spirit from the Port Harcourt refinery company this week. According to the publicity secretary, that's Joseph Obele, since the refinery commenced operations in November, it's been supplying fuel to retail outlets owned by the Nigerian National Petroleum Company Limited only. Though marketers still load fuel from the NNPCL, Obele clarified that the product marketers currently buy from the state-owned oil company, and which were mostly imported. And to other matters now, the Okitipupa Oil Palm PLC says it has embraced an ambitious modernization project with the acquisition of 4 mills to be installed in some of its 8 plantations located across 3 local government areas of Ondo State. The first and the second mills were built 50 and 34 years ago, respectively, with no additional one since then. So to complement the installation of the new mills and ensure a sustainable primary feeder for them, the company has finalized plans to plant nearly 750,000 to 1.2 million young high-yield oil palm seedlings on its 5,000-hectare grain field. This initiative is set to be flagged off by the Ondo State Governor, Dr. Lucky Aiyedatiwa, in the second quarter of 2025. Managing Director, Mr. Taiwo Dewole, stated that these measures are part of a strategic vision to reposition the company as a major player in the oil palm value chain. All right, let's get a check on the Naira now. We see Nigerian Naira gained ground against the US dollar last week, a positive sign for the local currency. And we see the NAFEX rate as a key benchmark in the foreign exchange market. That appreciated by about 4 Naira 50 kobo, closing at 1,535 Naira to the dollar. We see the NAFEM window, 1,534 Naira, up 0.44%. That was the close for Friday. So we see most of these asset classes starting the year strong. We see the Central Bank of Nigeria intervening, and that window, that's for the CBN window, closed at 1,535. Market analysts expect that this range will continue for this week, barring any unexpected matters in the markets. All right, let's go to our first conversation now. We'll get an outlook for the oil and gas sector, because it's facing a pivotal year in 2025, navigating a complex landscape of global energy transitions, domestic challenges, and evolving market dynamics. So, key areas of focus will be crude oil production, refining capacity, and continued impact of removal of fuel subsidies on the price of premium motor spirit. Well, joining us for this conversation is Mr. Madaki, is a managing partner, BBH Consulting. Joining me from our Abuja studio. Great to have you on the show. Good morning. Happy New Year.
Yeah, same to you, Ladi. Nice to be here. Thank you.
So, given the, challenges in the oil and gas industry in 2024, from oil theft, pipe vandalism, declining production, what would you say are the realistic targets for, Nigeria's crude oil production in 2025? What's your crystal ball telling you?
Well, I think we have to exercise some level of cautious optimism, towards the industry in 2025. 2024 was particularly a turbulent year for the oil and gas sector. And, but towards the end of the year, the indications were that the oil production was inching up, and hovering between 1.7 to 1.8 million barrels of oil a day, which is a higher rate of production, than we've encountered in the country for quite some time. So, with the benchmark in the 2025 budget of 2.06 million barrels a day as the production target, that means that the regulators are looking at increasing production by about 200,000 barrels a day. Barring any challenges with security, and pipeline vandalism, and with sustained improvement in community relations in the Delta, I think that target is realizable. Considering that there are a number of wells that are not producing, not because they are not able to produce, but because they've just not been brought on stream. So, if the regulators get their act right, and they encourage, the producers to go and produce the limits, I think that it's clearly achievable. And we should be looking at an optimistic 2025, for the oil and gas sector in terms of production.
All right, so looking at the body language of the regulators at this time, from 2024 into this new year, are there any indicators that the regulators will actually get their act right in 2025?
Well, from pronouncements from the regulators, late in 2024, it looks like there is an upbeat, optimism on their part, to, ramp up their game and ensure that the industry is better regulated, So, but a lot, how that translates to actual production in the field, comes with its own, so, there's a lot more than just optimism, to see that translate to actual activity. And so, judging from the fact that there have been a lot of ups and downs in the industry, leading to a lot of skepticism on the part of, industry watchers, it remains to be seen how that optimism will play out, in terms of actual hard production, on the cards, especially because we don't seem to have much of an option apart from increasing production, because apart from Dangote refinery and the NNPC refineries in Port Harcourt and Warri that are coming on stream, there are also a number of other refineries coming on stream, BUA, the Boya refinery and the Watersmith refinery. By the time many of these other refineries come on and begin to need crude oil, the producers will not have any option but to tax themselves to produce crude in order to meet the domestic crude supply obligations. So I think there is a lot of work that needs to be done. And we have to encourage the regulators to do the best they can, to ensure that these things are done seamlessly.
And, talking about the refineries, coming on stream for the Warri refinery to the Port Harcourt refinery, in your view, is 2025 looking like the year, because you also mentioned other refineries that are coming on stream too. Is this the year that Nigeria starts to refine its own oil and continues that going into the future?
Yes, the outlook for refining in Nigeria appears to be quite optimistic, especially with Dangote refinery, which is actually the major catalyst for the activity we have recently witnessed in the industry. NNPC appears to finally be getting their act together, because there's a competitor in the private sector that is that has gotten its act right and is actually producing, rolling out products from its refinery in Lagos, and that is Dangote. So I believe that, things are going in the right direction as far as refining is concerned in Nigeria, and this should have happened, many years ago. But as they always say, it's better late than never. We also hope that, with all of these activities coming on, with better, when the market is better supplied, then the competition that we hope will come on board, which will drive down the prices, for the benefit of the consuming public, will happen, But it's still a wait and see game. But I see the the market being properly supplied with locally produced petroleum products, which should have a positive impact on the economy going forward.
What are you seeing for subsidy payments? Is that truly gone?
Well, from all indications, there will be no point paying any subsidy, talking about subsidy anymore, because the supply source is no longer uniform. When we had just one supply source in NNPC, the process was so opaque that nobody actually knew what to believe anymore. But with Dangote refinery producing and supplying and selling directly to the marketers, and with NNPC also producing and selling to marketers, it will now be very difficult to justify that there is any form of subsidy. In any event, the government has said that subsidy is gone. And even though subsidy didn't quite go when they said subsidy was gone, what we have seen in the way the prices have been moving in the market lately, is an indication that subsidy has actually gone, and that market forces are beginning to influence how the prices will be running. So we have to watch to see how that goes, and hope that the prices continue to come down, as the market is better supplied and as the market becomes a more perfect competition, between the different players, So as far as subsidy is concerned, yes, I believe anybody who is making a claim for subsidy now will actually, have a hard time convincing anybody that there was any need for that,
And what do you think we should all be doing at this time, the start of a new year? What do you think the regulators should be doing? What do you think the refiners should be doing so that Nigerians can pay sub 500 naira at some point this year for PMS?
Well, 500 naira, per liter for PMS will be very optimistic. But, of course, the whole world runs on optimism. I think that, the midstream and downstream regulatory authority needs to be very active in policing the industry to make sure that the refineries are running optimally, and that the whatever bottlenecks there may exist to competition should be removed. So that the market can get the most benefit, from the different, refiners putting their products in the market and wanting to gain market share. The same way we saw competition reduce the cost of services in the telecoms industry is what we are expecting will happen in the oil and gas sector, in the downstream, for supply of PMS and the other products in the value chain. So, yes, I think that prices will continue to go down, but whether we are going to be able to achieve a 500 naira per liter price for PMS in 2025, remains to be seen. That's overly optimistic, but who knows? It's early days yet, but the more the other refineries that are expected to come on stream, and supply in the different regions, thereby reducing, the cost of haulage, we should be able to see some of those efficiencies translate into lower pump prices. But as it is right now, it's difficult to predict a particular price, for per liter for petrol. But I think it will be realistic to expect that the prices will continue to taper down, no matter how marginally, it does, yeah.
All right, we'll definitely all be looking out and tracking all these prices. Thank you so much. It was great having you. That was Chief Madaki Ame, the managing partner at BBH Consulting. Thank you so much.
Thank you very much, Ladi. Nice being here.
All right, we'll take a break now. We'll also get an outlook. It's the month of outlooks at this point. We'll get a check of what's going to happen for the Naira, the economy, and inflation. That's in a moment. Stay with us. All right, so 2025 presents both challenges and opportunities for the Nigerian economy. It's time to examine the key economic indicators, including inflation, interest rates, and exchange rates, to assess the overall economic health of the nation. It's the month of outlooks, as I said before. Let's hear now from CardinalStone what to expect. Joining us for this conversation, we have Baboye Olaolu, who's a lead economist at CardinalStone, joining me right here in the studio. Good to have you. Happy New Year.
Yeah, same to you, and thank you for having me.
It's been a while.
Yeah,
had you on the show, and finally we're doing it in person after a long time.
I'm excited to be here.
How's 2025 looking already for you?
Well, it's great. It's the time to relax, to get back to work. So basically, the first few days has been a time of relaxation.
Still laid back, a little bit.
Kind of.
All right. So looking at 2024, there was the same old headwinds from inflation and MPR. We see the central bank over 850 basis points hike.
That's correct.
Trying to tame inflation. And I see some data you put there. If you're looking at the flow of inflation and MPR, if you can put that up for me, you see the way inflation, we've seen inflation on the rise, MPR also, matching that. There you have it. And you already have expectations for December 2024, but it's looking like it's somewhat stable. That's inflation. What's the data telling you?
Okay, so there will be slight increase in December 2024, right? It's festive induced activity, a lot of buying things for Christmas. So the expectation is that inflation will close the year, that's 2024, at around 35%. Right, but
35%.
Around 35%, certainly, right? But coming into 2025, we think that the dynamics will change. We think that inflation, on an average, will moderate modestly. So we're looking at an average of 29%, 30% on an average for 2025, compared to 33% average that we're expecting for 2024, right? Why the moderation? Not because the dynamics has materially changed, just that some of the pressure point that we had in 2024 are somewhat reducing. For example, exchange rates, which devalued by about 40% in the course of 2024, is likely to be more stable, right, in the course of the year because of the effort of the CBN, the improved flows that we're seeing, foreign investment excitement is likely to keep the Naira modestly, we're going to see modest devaluation compared to what we've seen in the last 2 years. That should have a positive pass-through to inflation. Secondly, PMS prices are likely to be much more stable, or energy prices generally are likely to be much more stable, right? I heard the last speaker before I came up, he was talking about, PMS prices. I think that if we have Trump come on board that forces oil price down, and we begin to see FX stability, then you should expect a pass-through to PMS prices, right? PMS prices are currently being sold less than 1,000 Naira in Lagos, compared to the over 1,000 that we had some months back, right? We don't expect a massive appreciation, we expect more stability. Now that stability is comforting for transport inflation, will pass through to food and with core inflation, right? And then base effects. So the combination of these three factors are likely to keep inflation slightly lower compared to this year. But post-2025, when you go to 2026, 2027, we might begin to see inflation come down to about 20% levels, right, which is a level that the CBN appears to be fine with as of the last communication.
Right, and we see optimism around the Naira starting the year quite stable and strong. Following from 2024, we've seen the NFM and parallel market. They have converged. They converged in 2024, and they've been moving along the same line towards the end. So is this the year the Naira strengthens, 2025?
Okay, so the argument for Naira stability has never...
We shouldn't talk about strengthening, we should just talk about stability.
Yes, that's the focus.
All right.
Stability and reduced pressure. right? The conversation around naira stability has never been that strong, right? For few reasons. Number one, we are seeing a lot of foreign investors becoming excited about the country. I was having a conversation this morning with my firm, and I made them to realize that historically, this is the best time, or this is the time that foreign investors are so confident in the central bank compared to historical disposition, right? They love the policy that the CBN is doing, they love the communication, they love the clarity. So clearly, it's bringing a lot of encouragement to them. And we're seeing a lot of foreign flows. And you recall, before Cardozo came in, we had backlogs. About $7 billion exited this economy last year. They felt they wanted to leave. It's fine. There was easy repatriation of funds, no restrictions. It's been long ahead of that. And then we also had a lot of reinvestment, which means investors are confident in the economy. Secondly, on what is driving naira stability, or what should drive naira stability, is the recent electronic FX window that the CBN created. It gives a feel of what happened in 2017. In 2017, when the I&A window was created, what we saw was that naira appreciated both at the parallel market and at the official window from 390 to 360, and was stable at 360 between 2017 April, May, till few months before COVID. Right? This is giving a feel of that again, that we might begin to see foreign investors becoming more confident, because the system that was created has brought clarity to the FX transaction. It has reduced the magnitude of speculations that we're seeing. So clearly, it's going to be a good one to look for. The only thing is that the window or the system is yet to be tested. When we begin to see pressure from regular demand pressure, if the system is able to withstand that, then this is comforting. Then we have other factors like the fact that Nigeria has greater access to dollars, be it from dollar domestic bond, be it from euro bonds. We had book order of $9 billion. That's exciting, right? So we have reserve that is growing. All these factors gives a feel that the conversation for naira stability cannot be this strong, right? It's super strong compared to.
I guess we're riding on confidence at this point. All right, let's look at FPI and FDI now. So hot money is getting hotter. That's looking at foreign portfolio investments. We're seeing for November 2024 that outpaced FDIs by a whole lot. So talk to me about the advantages of FPIs outweighing FDI, even though we would prefer FDI. We do. Okay, so it's good to provide a bit of context here. First, the actions of the monetary authorities will always influence that of the FPIs, the hot money. The actions or the combined action of the monetary authority and the fiscal authority will influence what you will see from FDIs. Now, the FPIs, like I said, are gaining more confidence in what the CBN is doing. And we've rightly mentioned in the past, the fiscal authority will like the fact that they are coming with a lot of reforms. Now, these reforms, they typically take a significant period of time, mostly medium term to long term, before the benefit fully crystallizes. So you might see a 5-year period, you might see a 6-year period or more. Take, for example, in early 2000, there was telecommunication reforms and other reforms that the government put in place. The benefits came some years after. Now, it is those reform benefits that will inspire what the FDIs will do. For now, the benefits are still not yet to be fully, they are yet to fully crystallize. Hence, FDIs are still not sure what's going on. So for now, they will most likely be on the sideline, observing things and seeing how things will go. But if you see these reforms, from the fiscal reforms, from the FX reforms, from the overall economic reform, if we see progressive or stay in the course on that reform, then they will be encouraged to come. So at some point, what do you think we should be doing now, short-term moves, to allow FDI, that's foreign direct investment, somewhat outpace or maybe have a level playing ground with the FPI?
So for now, we should not be bothered about bringing them at par. FPI will most likely continue to outpace at the moment. What we need to do is stay the course, continue with the reforms, stay it. It might not be comfortable now, but it's short-term pains for long-term benefits. So stay the course, and certainly they will come back.
All right, let's look at the stock market now. What are you seeing for 2025? Was a great performance in 2024. Does that continue, or do you see short-term pullbacks for the all-share index? That's for stock market.
So we really think that the stock market is biased to the upside. We're looking at a return of 40% for 2025, right? We think that, number one, from a macro perspective, the sector that we think will benefit the most or will outpace the most this year will be the oil and gas space. right? So we expect that pass-through to affect both the upstream players, the downstream players, the likes of Aradel, the likes of Total, the likes of Seplat. Secondly, we like stocks with corporate actions. Presco, they have an acquisition that they did in Ghana. It's yet to be consolidated on their books. Seplat's acquisition was recently completed. You begin to see the benefits this year. We also like stocks that are currently deleveraging. The likes of WAPCO, they've deleveraged. The likes of MTN, renegotiating their TOA contracts. The likes of Airtel. Airtel is reducing its OldCo as, paid off its OldCo debt. They are reducing their OpCo debt, right? We also like dividend-paying stocks, the likes of banks, solid dividends. So we think that all this will drive a lot of positive sentiment in the equities market.
All right, we'll keep watching and see maybe if we see some kind of outperformance at some point. But thank you so much for giving us, I'm sure you guys had to look into your crystal balls really well to give us this outlook. That was Boboye Olaolu, lead economist, CardinalStone. Great having your perspective today.
Thank you so much for having me. Yeah.
All right, so there you have it. Those are the expectations. This should help you, somehow see how you can balance your portfolio so you can profit and have a better year than 2024 in 2025. Remember, you get all of that information right here on our business shows on Channels Television. That's it from me on Business Morning. I'm Ladi Williams. I hand things over to the Sunrise Daily team.